so to move into a 1031 exchange in that situation is a little bit tricky.
What's the biggest frustration when it comes to the 1031 exchange? I'm curious, and kind of your expertise there.
So I don't have a whole lot of expertise there. I will be very frank about that. We've looked at some options, let me just say, with some deals that we have done. And one of the things that happened to us is we sold a business. Well, we sold a business where we had a partner. So we really were not able to, but we also own a building. Let me back up a little bit. We also own a building, a commercial building. And so with this particular partner that we have not sold, but we have looked at some options. And so to move into a 1031 exchange in that situation is a little bit tricky, because you can't 1031 exchange when you've got two different businesses, as I understand it, and you're selling a business to put those dollars into another project to defer capital gains. So one of the strategies that we've had to do that was not a 1031 exchange when we sold our business is fast and furiously within the last quarter of the year. When we did that, we had to invest our dollars into certain types of structures like agricultural, buying a ranch, carbon scrubbers, some investments that were like crazy all at the end of a year, but they weren't 1031 exchanges.
Yeah, we call that the shotgun wedding, right?
Well, I did it. We did it, and it was crazy.
And
you learn a lot. You learn a lot.
Yeah. Yeah. So the traditional challenge with the 1031 exchange is it's like Blockbuster in that you typically not getting what you really want, right? Like you typically wouldn't be investing into carbon scrubbers or maybe even buying that ranch or putting into agricultural, essentially doing all these backflips and sidekicks to get, be able to defer that tax or get some tax mitigation or whatever that might actually do for you. And so the problem is the tax tail ends up wagging the investment dog. And that's what puts people in challenging situations like we're in right now, where people had 1031 exchange and overpaid for properties the last few years, especially multifamily cap rates being, very low and interest rates were very low. And now they have these adjustable rate mortgages, and these adjustable rate mortgages are now going to put them in a cash flow negative position. And they're going to start hurting with their, all of their investments, right? Or some of their investments, and they might have to get, have to work out something with the bank or sell at a discount. And so the idea is to not sell high and buy higher 180 days later, or sell like a business that doesn't qualify for a 1031 and then have to put it into something that you don't really want to invest in. The idea is to put it into something that can give you freedom of time, freedom of choice, freedom of diversification, dollar cost average, freedom of asset type. And so we want to encourage everyone to go to capitalgainstaxsolutions.com to learn about that, how to eliminate the 1031 exchange using something called a deferred sales trust that works for businesses, crypto, works for, it can save a failed 1031 exchange, public or private stock. And the cool thing is you can invest it back into things that make sense for you at your own timing, rather than putting into things that maybe doesn't make as much sense for you. So go to capitalgainstaxsolutions.com to learn more about that.